All right. Well, good afternoon, everyone, and welcome to the MIOYM Blueprint, a strategic approach to residential equity. Today, we're going to be pulling back the curtain on how we identify, acquire, and exit at high velocity real estate deals. And what we're going to be covering today is who we are, our history, and 25 years of experience, what it is we do, the high velocity niche of distressed residential assets, the proprietary technology that we utilize, how we use this automation to dominate the acquisition process, how we add value, what our specific formula for proprietary rehabilitation is, our deal analysis, how we ensure we never overpay for a property, our construction, managing risk with a national boots on the ground network, our exit strategy, investor returns, one property example, which is a walkthrough of our recent successful project, and tax advantage investing, how to utilize your IRA to fund these opportunities. Now, I just want to go over a quick disclaimer. This is going to be real quick. Before we begin, I want you guys to note that this presentation is for informational and educational purposes only and does not constitute any offer or to sell or a solicitation of an offer to buy any securities. All investments are made solely pursuant to the official term sheet and subscription agreement. This is for accredited investors only, and I don't think I have to go over with everybody in this day and age, but I will say this is a Reg D offering and is restricted to accredited investors. Typically, it's first to individuals with a net worth of exceeding 1 million or a sustained annual income of 200,000 or 300,000 jointly with a spouse. Now we're going to go to the actual offering and what it is we are doing here today. I hope everybody is enjoying themselves and get something out of this as I am having trouble sharing my screen. There we go. Okay. There we go. Okay. Now, MIOYM Equities is a private equity firm specializing in high velocity niche, the acquisition and rehabilitation of distressed single family residential properties across 36 major metro areas. We focus on undervalued assets in urban hubs. We completely avoid the rural markets to ensure liquidity. We want as many eyes on the product as possible when we go to sell. Now, we are not new to this space. MIOYM has been operational for over 15 years. It was launched in the wake of the 2008 financial crisis. Our CEO, Mark Cox, has been active in the real estate since 1999, overseeing the acquisition and sale of more than 600 properties. Now, myself, I am Robert Costamiris, president of MIOYM Equities. I bring over 20 years of experience as a financial advisor to this firm, including 9 years managing a boutique securities firm. This combination of real estate acquisition expertise and disciplined financial management has allowed us to deliver consistent results. Historically, our investor returns have ranged anywhere between 15 to what it is currently to 36% when we first started out. Now, our strategy relies on capturing deep market discounts. Generally, we're looking at properties that are 60% below market value. To find these deals at scale across 36 states, we use a proprietary technology stack designed by my business partner, Mark Cox. Now, maybe I can't talk because I'm going to go just a little bit off script here and show you the system live and in effect. I don't know what we're going to see here, but I logged into our deal finder and you'll see it checking the live properties right now as we are. So I'm going to switch screens here for you. And now if you see here, this is our MIOYM deal finder. This is actually going through deals as we speak. And you'll see there's a 1.3 million properties that it's looking at. 347 of which are deals, and 1.34 million that are not deals. And you'll see here Willow Street in Rochester, listing price 119, 80% below, which is where we get our valuation, is 95,000. Aftermarket value is 1.1. You have Millersburg, Jacksonville. You see, it's not all in the same area. New York, Massachusetts, Palm Harbor, Concord, and it goes on and on and on. I'm not going to go through all 1.3 million properties, but this is where we get all of our deals from and where we get it. We can filter by state, the limit, how many addresses, what the actual market value is, and the date and things of that nature. So that is our deal finder. And I'm going to switch back to our presentation now so Mark doesn't jump in here and kill me for sharing that with you. Now, buying right is one of the main things, but it's only half the battle. Now, we manage a national boots on the ground network of vetted contractors who upload construction inspection detail reports, including scopes of work. And let me just switch the slide here. Here we go. Which I send out to investors as I get them. We mitigate risk through fixed cost approach to renovations, standardizing items like roofing, flooring, and structural repairs. Our average turnaround time from acquisition to retail ready is 90 days. Now, each property, just so you know, is isolated in its own LLC. And we're leveraging, and just give me one second, we're leveraging institutional relationships where lenders fund 85 to 90% of the purchase and 100% of the renovation and closing costs. We look for equity partners, and that's why we're having this webinar, so we could be introduced to people and who have interest to cover the final, let's call it 10 to 15% of the acquisition, legal, and carrying costs. Now, our exit strategy, we have a 12-month exit that we prepare for all of our properties. Once the property is sold, we repay the debt, and you as the investor we receive your equity back plus a 15% return, which is 100% fee-free. And this is because we're the operator, we're taking all the upside of the property. And on the flip side, if there's a loss on the property, we're taking that as well. And to ensure we hit these timelines, we utilize a two-part exit strategy to get the asset sold. We're listing with a local realtor and that knows exactly how we go and how we operate. But at the same time, we have an affordable homes department, which simultaneously we market the property to first-time home buyers, where there's a monthly payment bridge. We provide opportunities for buyers to own a home for the same monthly payment that they would otherwise spend on rent. So basically what we're doing is we're going with a local realtor, and then we're also listing it on our affordable homes page as well, where we have a team that's in the office right behind me that's following up with them. And our strategic support, we introduce these buyers, and that's what the team behind me does, introduces these buyers to FHA lenders, which is a first-time home buyer lender, and offer down payment assistance so they could achieve home ownership for the same cost they expect for a rental. Now, our goal is to acquire these properties, and just give me one second. I think I got to go back a slide here. Nope. There we go. Our goal is to acquire properties at a 60% discount to market value. And as I told you before, and I showed you, we use the proprietary technology designed by my partner, Mark Cox, that helps us identify these distressed, undervalued homes in all these different markets. Once we acquire a property, we renovate it to increase its market value, and we use the institutional lenders that I was telling you about before to fund 85 to 90% of the purchase price and 100% of the renovation costs. So we're leveraging the financing to maximize returns. As I mentioned before, we're looking for equity partners, assuming it's a fit for you, to cover the remaining capital stack, which includes the 10 to 15% of the acquisition price that the lenders don't cover, closing costs, legal fees, and any carrying costs that the loan may incur. Once the property is sold, the debt is repaid, and as I told you before, you get your equity back with a 15% return, which is 100% fee-free. Now, there's two different ways we can go about doing this. And one is many investors don't realize that they could participate using tax-deferred money through a self-directed IRA. And obviously, the other way is you just use cash that's in your bank account that you've been saving up, that you may have sitting on the sidelines looking for a little bit better return, or it's in a brokerage account, whatever the case may be. But utilizing a self-directed IRA, you're using qualified funds that are is usually tax deferred. And those IRA investment benefits that you get is that, just as I mentioned, tax deferred growth, your returns grow without immediate taxation. So the 15% is staying at 15% until you're ready to start taking those the money out of your IRA. You get diversification, which you can move retirement funds out of the public markets and into tangible real estate. You get the compounding returns because you could reinvest it into high velocity returns. It's only a 12-month hold within a tax advantage shell. So that 15% can keep compounding as you keep investing it with us. Now, I myself have set up and have established relationships with a few companies, Equity Trust, the Entrust Group, and Heritage Group, just to name a few. And I've personally worked with many more providers that we do not have formal relationships with, so we could likely accommodate your current custodian. Before I say we can, I always speak to them first to see what they look for and what they need from me, and then I tell you if we could work with them or not. But I generally handle it all for you, or you could handle it yourself, entirely what you want. It's hands on or hands off. You decide. Now, if you're taking a look over here, we have a property example of a deal breakdown. This is exactly what one of our deals looks like, and I'm just going to touch on this very quickly. It's the purchase price is 317,000, renovation is 99,000, total all in is 417,200. We get a loan of 385,000, which covers a large portion of the purchase and all of the renovation. And then, oops, sorry about that. And then the equity portion of the acquisition that they don't cover is 31,000. Interest and points is 21,000. Closing costs and legal is 25,000. So this property needed 78,000 of equity. The sale price on this was estimated at 596. I think we sold it for somewhere around there. To repay the loan was 385, if you notice over here. Closing costs, which is another 37,000, and repaying the equity, which is the 78,000, plus at the time we were paying a 20% return, turns out to be 90,500 with a net profit of 82,290. So if you had invested this with us, we would turn it into 90,500, and I think this one was in 12 months. So we were right there with that one. Now I want to summarize. We find deals. Let me just stop sharing. I'll leave that up so you guys can see it. We find deals at a 60% discount using proprietary technology, renovate within 90 days, and exit within 12 months to provide a 15% fee-free return. What I want to do is I'm going to stop sharing here. I'm going to look at my ugly mug, and I'm going to open it up for questions. If you have a question, you can either put it in the chat. I'll take a look at it there, or you could just start speaking, and I will answer your questions there. It's entirely up to you. Give you a few moments to talk amongst yourselves. Good. Does anybody have any questions, comments, concerns?
In the example that you show, the 82,000 on the bottom line, I assume is your profit?
Yes, that is the firm's profit.
That's fine.
Yeah. Yep. That's a good question. There's a question in the chat. What if you're not able to sell the property I invested in? Oh, that's a good question. So we've never really had too many issues with that, but so we are a 12-month hold for the properties. I tell investors to anticipate that your money's going to be locked up for 12 to 18 months. There are delays with permitting, construction, selling the property. There's always delays, but it is an annualized return, and you're always getting paid for when it's in there. And then should we not be able to sell the property, which is a rarity, we tend to, try and figure out a way to liquidate your funds after the 24-month time frame. But that happens to less than 5% of properties. How many investors in each property? Oh, that's a really good question. So in each property, as I mentioned, it's set up with an LLC. One investor goes into the property. If we have larger properties, we have a property in New Jersey we're dealing with that needed 550,000. There's 3 investors in that. We just break it up accordingly. But 90 some odd percent of our properties are only one investor for each property, but you're all broken up into the property according to your investment. Do I get to pick the property I invest in? So there's two ways that this goes. Let me repeat the question. The person was asking, Noah was asking, do I get to pick the property I invested in? So you can, if I have a selection of properties. Right now, we're dealing on a 200 and something $1,000 raise. There's four properties in there from Michigan. I think it's Georgia, Texas, and then there's one other one. I forget what the fourth one is. You can, by all means, say, you know what, this one needs 75,000. I'd like to invest into this one. Or if there are no properties, you say that you want to commit to a certain dollar amount, 50, 75, 100, entirely up to you. And then we take a 10% deposit. Within 90 days, we have to find you a property. If we don't find your property in 90 days, I call you up, and it's obviously going to be before that, and say, hey, we haven't found something, but we have X amount of properties on the horizon. Do you want to keep the deposit with us, or do you want us to send it back to you? So you have that choice. If you decide to keep it with us, your money starts accumulating interest on that date instead of the date that the property closes, and then we just keep moving forward from there. So yes, you get to choose, but at times, if we have to move money around, or if a property doesn't close in a timely manner, we'll move you from one property to the next, just to keep your money moving. Does anybody have any other questions, comments, concerns?
How many years have you been doing this?
2008, the company has been in business, and Mark, my business partner, has been doing this since 1999. I myself have been with the company since 2022, 4 years.
Have you ever lost money on a house?
We, we have lost money in a house. The investor does not feel that, though. You get your return. It's like asking somebody if they've lost money in a stock. If they say they haven't, they're lying.
He's going to Vegas.
What's that? Yeah, it definitely does beat going to Vegas. Although you definitely have some experiences and a good time in Vegas. And just so, how many properties do you do in a year? Oh, we've been doing around 20 to 25 properties a year. This year we're up to, I think it's June. No, I know it's June. We're 6 months in, and I think we're up to 12 properties this year alone. I'd have to double check that already, but we're doing anywhere between 23 and 25 properties a year. Our goal was to get up to 50 this year, which we're kind of not on target for. So we're a little behind the eight ball there. Hope that answers your question, Marcus. And just so everybody knows why you're coming up with questions, and you can interrupt me with a question, and I'll just stop talking for anybody else who has questions. But I'm going to be sending out a replay of this so everybody has it. If you wanted to take a look at the contracts, I could send those to you. And if you want to take a look at any properties or are offering now, I could also send those to you. If you're coming off of my CRM, we've spoken before. I've already sent you the offerings. I'll be more than happy to send it back to you. I have no problems with that because I know a lot of my emails get lost. And that's about it. Oh, here we go. If I'm not currently liquid, but I have RIA money, can I use that? Yes, and that is what the self-directed IRA that I was telling you about was comes in handy. And this is coming from Laura. If I'm not currently liquid, but I have IRA money, can I use that? 100% you could use your IRA money. With the relationships we have through a self-directed IRA, we're more than happy to utilize those funds. It's actually more beneficial for you to use them because you can't really touch it till you're 59 and a half. It's tax deferred, so that 15% you get is going straight back to your IRA custodian, and it diversifies your portfolio. I'm a huge proponent of the stock market and what the equity and debt markets offer to you, but you should always be somewhat diversified, whether it's with real estate, whether it's with gold, whether it's with Bitcoin, whether you believe it or not. You should always diversify your assets, even if it's private investments. You should, have some stocks, bonds, mutual funds, things of that nature, and break it up. Can you guarantee the 15% return? Now, I come from Wall Street, so a guarantee is if we're dead and go out of business. If our business blows up tomorrow, you still get paid. So I don't say guaranteed. Since 2008, all investors have returned their principal and whatever was owed to them back to them. So again, past performance doesn't guarantee predict future results, but it is a good indication of how we operate. All right, I think I got all the questions. One more round. Anybody else have any other questions, comments, concerns? Anybody going to Vegas? All right, well, listen, I want to thank everybody for their time today. If you do have any questions, if I'm cutting you off, feel free to shoot me an email. I'm going to send you a thank you email either later today or tomorrow. Like I said, if you wanted a copy of the full term sheet or discuss specific upcoming properties, shoot me an email. You should have gotten it, but if not, you could contact me directly at robert@myoymequities.com, and it's MIOYM equities.com. I appreciate everybody jumping on and coming on here. I hope you at least got something out of this and that you are educated in some way, shape, or form, whether you do or don't do business with us. And I hope that we do speak again. It is a nice day out here in Westchester County, and I hope everybody has a beautiful day. Thank you very much for joining us.